Welcome. In this video, will the ZBCN coin surpass its peak? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. When the overall structure of the chart is examined carefully, it is clearly seen that the price has been in a downward trend recently, moving within a bearish trend. This descending trend pattern is a common formation in technical analysis and is generally characterized by the price making lower highs and lower lows over time. While this may appear negative at first glance, it can actually indicate a transitional phase that holds important opportunities. In fact, strong and sustainable uptrends often follow downward trends. Specifically, the current price level is positioned very close to the resistance line of this descending trend. This line has historically been a level where the price has attempted to break above multiple times, only to retreat due to selling pressure. However, this time the situation appears to be a bit different. Both momentum indicators and volume profiles suggest that the price is showing a stronger structure as it once again approaches this trend line. In other words, the price is nearing the descending trend line once more, and this time, it may have the potential to break through it. In technical analysis, trend lines are not just graphical elements, they are also considered psychological support and resistance zones in the market. Long-term descending trends in particular can create the expectation in investors' minds that the price will pull back from here. However, trend lines weaken with repeated testing and eventually break. At this point, a similar picture is forming in the current situation. As the price once again approaches the peak of the descending trend, buyers are making stronger moves while selling pressure appears to be weakening. This can be interpreted as a highly positive signal that increases the likelihood of the descending trend line breaking. Breaking this descending trend line would not only provide short-term relief, but could also mark the beginning of an entirely new bullish narrative in the bigger picture. In technical analysis, a trend break is one of the first and strongest signs that the direction of the trend has changed. If the price moves above this line and remains there, it will positively influence investor expectations. As a result, buying pressure increases, and a wave of confidence spreads throughout the market. This paves the way for the price to reach higher highs. Looking at historical price movements, it is evident that prices often go on impressive rallies after breaking similar descending trend patterns. This clearly shows that the current setup should not be underestimated. If the price breaks above this critical trend line, it will have a very positive impact not only technically but also psychologically on investors. After such a breakout, nearby resistance levels may be tested initially, followed by the potential targeting of new highs. Moreover, if the price breaks this trend line, new targets above the previous highs can be set. This potentially provides a profitable opportunity for short-term traders and also lays the groundwork for long-term investors to take strategic positions. If a new high is formed, the overall market sentiment will shift in a positive direction. This optimistic environment will attract more investors into the market, increasing the buying pressure even further. As a result, the price could soon aim for higher levels. But we cannot base our analysis on trends alone. Let's take a look at other metrics as well. Stay tuned. When we carefully examine the chart structure, we can see that the price has started to form a highly significant and potentially powerful pattern. Specifically, a structure resembling the widely recognized and strong cup and handle formation in the world of technical analysis appears to be taking shape. These formations are not just technical figures, they reflect deep market psychology and investor behavior, often serving as precursors to trend reversals or strong upward movements. Looking at the current price action, it appears that the cup is largely complete and the price is in the process of forming the handle. In classical technical analysis, the cup and handle formation is considered a very reliable continuation pattern. This structure typically begins with a long period of decline or sideways movement, followed by the formation of a rounded bottom cup shape. This cup indicates that the market has likely left its bottom behind and that investor confidence is returning. As the bottom of the cup gradually moves upward, investors accumulate positions at low prices. Over time, the price moves upward to form the right side of the cup, developing symmetrically to the decline that formed the left side. In the current situation, we can describe exactly such a pattern. After experiencing a certain decline, the price has gradually stabilized into a rounded bottom and then started to rise. During this process, investor interest has increased, and there has been a noticeable revival in volume. This shows that the formation is developing healthily, and investor sentiment is slowly turning positive. Once the cup is completed, the price reaches the peak of the formation, where naturally some profit-taking occurs. At this stage, the handle part begins to form. The handle typically represents a brief and limited pullback within a narrower range. During this pullback, investors tend to hold their positions, and those who bought earlier expect the price to rise again. At the same time, this handle phase provides an important opportunity for new buyers to enter the market. Investors who missed the move during the formation of the cup often see this brief pullback as a buying opportunity. Current price movements point exactly to this handle region. After a broad upward move, the price has entered a period of sideways and slightly downward correction. However, since this correction has occurred in a controlled manner and has been supported by volume, it represents not a distribution phase, but rather an accumulation process. This indicates that the formation is continuing to develop in a healthy way and that a strong upward move may be imminent, a very positive signal. Technically, once this formation is completed, the target is usually determined by the depth of the cup. That is, the distance between the lowest point of the cup and the peak where the handle forms is projected upward from the breakout point. This target indicates the potential peak the price could reach after the breakout. Looking at the current setup, it appears that the cup has formed a fairly deep structure, suggesting that a breakout could lead to a significant upward move in price. If this handle completes and the price breaks above the peak of the formation, it would signal a strong bullish move from a technical analysis standpoint. These kinds of formations are not only precursors to short-term gains, but are also considered the starting point of medium to long-term uptrends. A breakout above the formation's peak will increase market confidence and attract new buyers. This will rapidly boost buying pressure and could lead the price to test the formation's target level in a short time. One of the important elements that stands out when we analyze the chart in depth is the downtrend structure observed in the RSI indicator. RSI is an oscillator that is sensitive to price movements, providing traders with extremely valuable information about market momentum. In particular, this technical tool allows us to identify overbought or oversold areas, allowing us to anticipate possible price reversal points. But the RSI is not limited to this classic function. It also includes various analyses such as trend lines, support resistance areas, positive-negative mismatches, etc. And in the current situation, the presence of a downtrend on the RSI indicates a rather remarkable and promising structure in terms of technical analysis. This downtrend on the RSI suggests that over a period of time, buyers are weak and sellers are dominant. However, there is an important detail that we should underline here. The price may still not have broken this falling structure, but the RSI tends to break this downtrend before the price does. This kind of technical signal is often the first sign that the price is preparing to change direction. This is because the RSI indicator often reacts before price movements. For this reason, it is also considered a leading indicator by traders and analysts. RSI can sometimes break out before the price. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.